Hello everyone, welcome to TBR's webinar, Fast Followers or Left in IBM's Dust, Outlook for India-centric Vendors and TBR's BI and the BI Professional Services Market. I'm Justin Sargent and I'll be hosting today's session. TBR's research indicates vendors offering high-touch client management and industry-focused consulting such as IBM, Accenture and Deloitte are best positioned in the business intelligence services market due to growing client demand for solutions addressing business needs. As a group, India-centric vendors lack the consulting expertise of their global peers, which currently places them at a disadvantage in BI professional services deals that require in-depth strategy services as a lead-in to analytics implementations. India-centric vendors' long histories as fast followers enable them to grow rapidly in the IT services market by imitating their global peers at a lower price point. This webinar will explore whether this pattern will continue in BI services or if India-centric vendors will reach the limit of their ability to adapt to evolving client demands in the next 5 years. Insights from today's presentation are presented from TBR's BI Professional Services Vendor Benchmark. If you'd like to learn more about this report, please reach out to myself or one of the analysts after the presentation. Now, before we begin the presentation, there are a few housekeeping items I'd like to cover. First, we'll be recording today's session and posting it on our site, TBRI channel. We encourage you to visit our YouTube site to watch this presentation or any of the previous presentations we've posted. Second, we'd like to hear your thoughts and opinions on what we're presenting today. Please send any questions you have to the Q&A function on the WebEx, and we will answer as many as we can at the end of the presentation. And finally, I will be following up with all of you via email tomorrow afternoon with the link to today's recording as well as the slides from today's presentation. Now let me introduce the team presenting today. Patrick Heffernan is Principal Analyst for TBR's Professional Service Practice, where he directs the practice's syndicated portfolio and cultivates and manages projects on topics ranging from management consulting to firms' financial advisory services to emerging technologies. Jennifer Hamill is a TBR analyst and is the lead author of TBR's customer research and vendor benchmark reports on the BI professional services market. She also provides company-specific coverage on IBM Global Services. Amy McLaughlin is a research analyst in TBR's professional services practice, responsible for covering India-centric and multinational vendors across IT service segments, geographies and industries, and emerging technology trends such as cloud, mobility, big data, and analytics. Finally, we have Kevin Colby, who is a research analyst here in TBR, where he focuses on cybersecurity, analytics, big data, mobility services, IT consulting, and business IT consulting. His coverage focuses on the global software service companies, including HP, Dell, and EMC. And with that, let me hand this over to the team.
Thanks very much. So this is Patrick Heffernan, and what I'd like to do this morning, this afternoon, wherever you might be, is just sort of set the stage. We're going to talk about business intelligence services and the vendors in that space. And really we're covering, if you look at this slide now, you can see that we're covering the benchmark. What we have here are 16 companies. How many companies?
21.
21. I get it wrong every time. 21 companies in this benchmark. This work is supported by what you can see underneath that, the customer research and the market forecast. We're going to touch on those two pieces of research as we do this, but really this reflects the way that TBR approaches professional services broadly, IT services, everything that we cover, and that's taking a very vendor-centric business model approach to our analysis, and that's how we build up to the benchmark we're going to present today. I do want to point out one more thing before we really get going, and that's that this is the third edition of this benchmark. So the analysis that you're going to hear has been built up over the last couple of years as we've looked at the space and the way that it's evolved. We know these vendors inside and out. Putting them into this benchmark was our way of saying, this is business intelligence services, this is how we see them in this particular space. And again, it's been the third edition of this benchmark, so we're very, very happy and comfortable with the analysis behind this, having a very solid track record. So with that, I'll hand it over to Jen to get us going into the substance.
Thanks, Patrick, and hello, everyone. Today, I'll take you through the findings from our most recent research around BI professional services. First, we'll discuss overall trends that arose in the 1Q15 vendor benchmark, which published in July. And as Patrick mentioned, we'll be highlighting a few key findings from our related reports on customer research and the market forecast. Second, second, we'll take a look at the current performance of the different vendor groups we cover in the benchmark, with a focus on IBM and its consulting and systems integrator peers. Finally, we'll assess the threat that India-centric vendors pose to the current market leader, IBM, with a deeper dive into each of the top 5 vendors in this group. We'll also examine how hardware-led vendors such as HP, Dell, and Cisco could throw a wrench into India-centric vendors' plans to gain market share. So let's get started. Our research and modeling of 21 leading BI professional services vendors showed slight growth deceleration from 14.9% year-to-year in 1Q14 to 12.4% year-to-year in 1Q15. We attribute the slowdown to 3 major factors, 2 of which have to do with vendor activity and 1 is an overall market trend. First, major BI software vendors, which were mainly clients' first stop in purchasing professional services related to BI, are increasingly shifting services work to SI partners so they can focus more on more profitable software sales. 2, recent entrants into the BI services markets are beginning to mature, stabilizing their earlier startup-like growth rates. And finally, currency pressures impacted most of the top vendors on an overall revenue basis, the results of which flow through to BI services. But despite the slowdown, BI services still far outpaced the broader IT services market, which was flat on a year-to-year basis during the quarter. And as with the last 2 iterations of the benchmark, we saw average growth of benchmark vendors exceed that of the total BI services market. And we see this as the trusted advisor relationship remaining central to BI services purchasing, which benefits leading consulting and IT services vendors, which are able to use their established engagements with clients to upsell BI professional services. So now let's put the current state of the market in context with how we see the BI services market evolving. I mentioned earlier that we're seeing professional services delivery shifting from the BI software vendor to SI partners. So here I included a slide from our BI professional services market forecast to illustrate what we see as a 3-phase evolution in customer demand around BI and analytics. We've represented this here by speed, efficiency, and business value. In 2012 through 2014, we saw rapid adoption of BI solutions, with customers looking to software vendors as the go-to for speedy deployments. Now, with the sheer volume of new tools and vendors in the market, customers are catching their breath and taking a closer look at their BI purchases. Short-term business and IT strategy consulting engagements help these customers evaluate their BI landscape and consider how best to proceed with future investments. Viewing BI purchases through a business lens instead of a technology lens requires a skill set that most software vendors have yet to build in a significant way, which is why we're seeing SI vendors jump in to help customers optimize efficiency and generate the most value from BI investments. And looking ahead a few years, increasing emergence of new data sources from the Internet of Things will accelerate BI services market growth, as customers buy big data integration and managed analytics services to further drive business outcomes. But right now, the focus is on extracting more value from current BI programs, using professional services to guide the way through IT concerns such as security and data architecture, and business issues such as change management and process improvement. As we move to the next slide, let's take a deeper look at the BI professional services market demand by segment. This is from our customer research. We break down the BI professional services market into 4 service lines according to our taxonomy. At the end of the presentation, which you'll all receive, we have a slide with more detailed definitions of each of these segments. But as an overview, the 4 segments are consulting, integration and implementation, or I&I, application development and maintenance, or ADM, and operations, management, and maintenance, OM&M. We're here looking at results from surveys we ran in 2014 around BI software and services buying trends. When we asked BI software customers last year what their sentiment was regarding additional BI purchases, 55% said they were interested in more BI solutions. But most of these were evaluating, not necessarily committed to purchasing. Only 15% view expanding BI programs as a top priority in the next 2 years, indicating consulting will remain the dominant BI professional service through 2016. And then looking at the incidence rates chart on the right, there was a lot of interest across service lines, showing opportunity for services vendors to fill internal skill gaps and create end-to-end engagements around planning, developing, and optimizing BI solutions. So with these drivers in mind, let's look at revenue performance by segment in 1Q15. Consulting was the only BI services segment to accelerate revenue growth from 1Q14 to 1Q15. We attribute this to near 20% growth by leaders IBM, Accenture, and Deloitte, which combined comprise about 58% of BI consulting revenue that we benchmark. But also, we attribute this to concerted efforts by vendors across the IT services spectrum to build advisory capabilities that help sell BI solutions. ADM and OM&M each shrank as shares of BI services revenue, and their growth lagged the overall benchmark average, which we see as reflecting rising automation and commoditization of outsourcing services. For ADM in particular, pressure to generate ROI from BI as quickly as possible is drawing clients to prepackaged and cloud-delivered solutions, which is eroding revenue opportunities around BI custom BI application development, a trend which we expect to continue over the next few years. As you'll see when we get into the next section, India-centric vendors have recognized that they need to broaden their capabilities, namely in consulting, to keep growing in this space, as low-cost outsourcing will become less of a competitive advantage as customers expect business outcomes from BI. So now let's start talking about the vendor landscape. First, let me briefly explain what we're looking at here. The x-axis shows BI services revenue growth for 1Q15 compared to 1Q14. The y-axis shows BI services operating margin for 1Q15, and the sides of each bubble shows each vendor's volume of BI services revenue during the quarter. This quarter we used color coding to highlight performance trends within groups of vendors. So blue for IBM, which stands alone as the leader by revenue and portfolio breadth. Pink for global and Eurocentric C&SI vendors. Green for India-centric C&SI vendors. Orange for software-centric vendors, and purple for hardware-centric vendors. So this graph shows that there are growth leaders in each of the C&SI groups and the hardware-centric group, which speaks to the efforts by vendors from a variety of IT legacies to realign their portfolios and go-to-market strategies to meet evolving client demands around BI services. So now let's look at how these vendor groups fared on a share basis. So you can see here, despite its large size and aggressive competition from peers, IBM maintained its stake in benchmarked BI services revenue from 1Q14 to 1Q15, for reasons I'll get further into in a moment. Software-centric vendors ceded share to C&SI vendors with nearly flat revenue growth. Global and Eurocentric C&SI vendors expanded their leading share of revenue, but India-centric vendors grew revenue faster by offering low-cost alternatives to premium BI transformation services. And hardware-centric vendors' share revenue stayed flat due to offsetting performances by individual vendors. Now let's dig deeper into a few of the vendors, starting with IBM. IBM remains in a league of its own in the BI services space, using its unique combination of hardware, software, and services, and research resources to stay ahead of competitors. Even with its large size, slowing expansion, and heavy investment activity, IBM posted near-average year-to-year BI services revenue growth and operating margin in 1Q15 by using its analytics IP portfolio and global scale to win BI-led transformation deals across regions. 2015 is shaping up as a banner year for IBM in the realm of analytics. First, creation of business units around IoT and Watson Health solidified IBM's value proposition for delivering fast, domain-specific business outcomes through a combination of strategy and analytics technologies. And partnerships with Apple, Twitter, the Weather Company, CVS Health, and most recently ARM provide access to high-value data streams, setting the stage for IBM's business strategy and analytics consultants to address business challenges with comprehensive analytics insights. IBM's investing heavily in prepackaged analytics offerings and cloud-delivered solutions such as Watson Analytics, and most recently, the IoT Foundation's cloud product. Its messaging around rapid deployment and ease of use seemed to conflict with the FUD around BI that would generally drive a consulting and implementation sale. However, clients will be attracted by freemium or try-before-you-buy solutions, and once they realize a configuration of the product or of their own data management systems is needed to use the solutions to their full potential, IBM will be in the prime position to upsell consulting and integration services. But still, increasing reliance on partners puts IBM's services organization in more direct competition with SI peers, which have been playing the relationship building game for much longer. So with that, I'll turn it back to Patrick to comment on the C&SI vendors.
But I'd like to leave it on the slide for just a moment because we cover IBM in our management consulting benchmark, our IT services benchmark, our healthcare IT services benchmark, our global delivery benchmark, and then of course we do quarterly reporting on IBM. Oh, and our digital marketing services benchmark. So they are extensively covered within TBR's portfolio. However, there's nowhere else that IBM stands alone like this, where they are a category unto themselves, where they're sort of the Death Star in the middle of a graph, of a chart like this. So I think it's important to note the outsized role that IBM really plays here, and it's different from where we see them in the rest of the IT services space, as I mentioned, across all those other benchmarks. So then, if we look at now, we're going to color in some of these other dots. You can see the rest of the consulting-centric vendors here on this chart, and you know why are PwC, Deloitte, and Accenture leading? What is it that separates them? And it's pretty clear that they have a legacy of delivering consulting services. They have been investing in business intelligence capabilities, both in terms of analytics and in terms of the consulting capabilities around it for some time now. And honestly, those three firms are organizationally set up well to leverage their own consulting capabilities to drive further engagements across all of IT services and, of course, specifically in business intelligence services. So if that's true for PwC, Accenture, and Deloitte, why are Capgemini, Atos, and CSC lagging the average in this particular group? But the easiest thing to point out for Atos and Capgemini in particular is a currency impact. And I think that's important, but it's not what's really keeping them down. I think more important is that consulting has not been a priority for these groups, Atos and Capgemini in particular, over the last couple of years. Now that is changing. Capgemini Consulting and Atos have both made an investment in becoming better at doing the consulting work, not specifically within business intelligence, but more broadly as a whole, and so that's starting to pull through in the business intelligence space as well. What do we expect in a year from now when we do this webinar again? I think both of those conditions, both the currency and the lack of a focus on consulting, are things that these vendors are addressing. I think we'll see them shifting more to the right and up into the growth area. I think a key question, though, is going to be whether or not Deloitte and PwC and Accenture are not only able to hold off their consulting-centric peers, but also the India-centric and the hardware-centric competitors that they have in this space. And Kevin and Amy are both going to address those in particular, but I want to emphasize here that what Jen talked about earlier with respect to the curve, the adoption curve in business intelligence, she said that initially it was speed. We're now in a period where efficiency is the most important thing, and then we'll get to business value over the next couple of years. Delivering business value, delivering the consulting around business value, and explaining the return on investment that a company can get is exactly what Accenture, PwC, and Deloitte have done so well. So I think we'll continue to see them leading this particular peer group, and I suspect we'll continue to see them leading within the business intelligence services benchmark. So with that, I think I'll hand it back to Jen to take a look at the Indians.
Thanks, Patrick. So we'll be going into much more detail in the next section, looking at each of these vendors individually. But just quickly, what I wanted to point out is that India-centric vendors are fast followers in the BI services space, as they have been in many other IT areas. And their revenue growth tracks similarly to their growth to their global and Eurocentric C&SI peers, but with higher margins. This group has traditionally relied on low-cost delivery to offer competitive pricing while maintaining healthy margins, but costs becoming less of a deciding factor as clients seek onshore BI advisory services and prefer business value over cost takeout. So growing globally and up the value chain is challenging these vendors' margins as they're forced to invest in talent and acquisitions to remain competitive. Which brings us to the final topic we'll discuss today, the outlook for India-centric vendors in the BI services market. So for those of you that joined us for our BI customer research webinar back in April, you'll recognize this graphic, which we developed to highlight the various pieces that need to come together to drive customer value in BI services engagements. Having the tools and being able to deploy them quickly is important, particularly as customers demand faster ROI from BI investments. But this will only get a vendor so far, as the software-centric vendors have found. And understanding the technical nuances of BI deployments and broader security issues is another key attribute of a successful BI services vendor, as companies are looking to connect internal and external data sources to generate deeper analytical insights. But even with the underlying technology in place, BI's true value remains untapped without deep understanding of the customer's business objectives at an industry level and the expertise to tailor a BI solution to meet those needs. IBM and its global C&SI peers are well-versed in the consulting-led and industry-oriented approach to BI services engagements, which is why they're dominating this market. More and more we hear similar solutions-focused marketing language across the IT services vendor landscape, including among the India-centric vendors. But to actually deliver on these promises often requires a shift in strategy and significant investment. So with that, I'll turn it over now to Amy McLaughlin, who will provide more insight into Infosys and Wipro.
Hello. Thank you, Jen. So we get a lot of questions about what India-centric companies are actually doing and where they fit into the scheme of the BI market. At first glance, it's very easy to lump them together as all the same. They do all come from a low-cost outsourcing background, and as the market has been changing, they do all rely heavily on their technology partners, both traditional FI partnerships that they've had for years and newer niche players who are emerging as market leaders where the Indians want to expand. But they also have differentiated go-to-market strategies with nuances that play into where they currently sit in the BI market. I'm going to do a little compare and contrast that highlights Wipro and Infosys, both of whom are lagging behind their Indian peers in this benchmark in terms of average BI revenue as well as pace of revenue growth. When it comes to Infosys, a number of factors play into their laggard status. They're in a period of organizational transition with overhauled executive leadership in the last 18 months, and they were slower to move towards solution-led consulting. While they've always had a strong repeat customer base, they now understand and are working toward earning a higher level of customer trust and respect. So they'll have a better chance at winning contracts that not only process data functionally, but help clients get and interpret the intelligence they need. Their revised go-to-market emphasizes offering cloud-based analytics for modernization of ERP environments, which enhances their value proposition among their existing clients. When it comes to Infosys's portfolio, they also didn't make early investments into industry-specific IP solutions beyond financial services. That's where they tend to excel with their Finacle solution. And while the merger of Finacle and Edgeverve positions Infosys to streamline and accelerate their otherwise limited portfolio, the internal change management piece of these shifts will be tricky in the immediate term and will take time to smooth out. Infosys seems to have planted themselves on course to do better in the BI space longer term. Alliances with Cloudera, Tableau, SAP, and acquisitions of Panea, Scava, and ANSR Consulting serve multiple purposes for Infosys. It will help them broaden their portfolio, extend their client reach, and lend credibility in areas where they haven't really made a play, like digital marketing. I don't see them having a big play in IoT right now, but they did recently release their Infosys information platform, and I believe they have several pilots going with it, so we'll see. They have a lot on their plate right now, and moving to Wipro. I think that Wipro is, well, I know that Wipro is substantially adjusting their go-to-market, and they've hired several high-level TCS execs to aid in this transition. Most recently, they appointed Dave Chopra as VP of Global Infrastructure, I believe this week. But earlier this year, they inducted a new COO to realign their entire delivery system and another one to focus on emerging markets. So they're taking leaders from a competitor with a very successful business model and emulating it. As part of the new delivery system, Wipro renamed its Advanced Technologies and Solutions Unit to Wipro Analytics. And that will deliver services around artificial intelligence, machine learning, advanced analytics, data and information management, and big data platforms. They're hoping this positions them for a larger share of BI analytics services revenue. They're also planning to train 15,000 employees in analytics technology support. They fold BI under their digital umbrella with Wipro Analytics just recently at the center, and they rely on partnerships and co-innovation to drive BI-related revenue. We believe it primarily comes from operations management and maintenance, and what we're seeing from Wipro, I think, is smart moves, but they started late, and the benefits will take time to materialize. Putting all of these things together and looking comparatively at Infosys and Wipro, we see the biggest difference is that Wipro had an earlier strategy that required some investment. In the current benchmark, if you look, we see that Wipro's BI revenue growth has been slower than Infosys, but longer term, we expect Wipro's groundwork to pay off and surpass Infosys. As part of their strategy, Wipro began investing in IP earlier and branching out into other verticals besides financial solutions with their ServiceNext platform and presenting themselves in a consulting/solutions partner framework. They also moved to the front office more quickly so they could start with smaller digital customer experience types of engagements and gained traction more quickly. The trade-off has been that spending on IP investments diluted the pace of their revenue growth, and the movement to as-a-service cloud models has also been shrinking margins. That's all I really have to say for now, so thank you. Jen?
Thanks, Amy. So now turning to HCL Technologies. BI is a large part of a transformational shift going on at the company right now. HCL has been known for delivering cost-effective outsourcing services and using its relationship beyond the contract philosophy to expand engagements into higher value services. Offshore delivery has enabled the company to offer competitive pricing and win renewal deals, but the company recognized that closer client engagement was critical to the type of integration and solution development work needed for BI, leading to the launch of co-innovation centers and labs in the US and Europe, where most of its clients reside. But beyond the geographical shift in delivery, HCL is building IP and strategy into consulting-led offerings, which is a deviation from its prior emphasis on delivery execution. Solutions such as iCFO and zCMO target line of business executives and align HCL's BI portfolio around business outcomes, similar to IBM's portfolio. Still, HCL's business consulting capabilities lag those of its peers, forcing the company to partner to compete in high-level engagements involving strategy. Most recently, we have seen HCL hire from consulting firms such as Deloitte to start building internal advisory capabilities around digital transformation, which signals that the company is looking to reduce its reliance on partners to deliver higher value strategy services. But Cognizant, on the other hand, stands out from its low-cost peers with its Cognizant Business Consulting organization. Earlier this year, Cognizant took the well-worn step of creating a dedicated digital unit, DigitalWorks. Within this unit is digital strategy, which houses its analytics capabilities, as well as big data, which the company calls Code Halos, strategy consulting, and transformation. The company also offers several IP-driven platforms and frameworks that address the functional aspects of BI integration, including business process transformation and data warehousing, which helps to demonstrate its expertise on complex integrations gained from prior engagements. Cognizant's two-in-a-box consulting and delivery model allows it to position itself as a low-cost alternative to IBM and Accenture, offering onshore consulting in tandem with offshore delivery. Still, as cost loses importance in favor of quality and business outcomes, we see customers in the US and Europe preferring IBM and Accenture when it comes to BI strategy. We expect to see more niche-focused acquisition activity from Cognizant in the area of BI strategy, similar to how it acquired Cadian Group to build its digital marketing capabilities for life sciences and Odyssey to gain a foothold in Australia. Now back to Amy to finish up with TCS.
When we look at the overall view of how India-centric companies stack up in the BI professional services space, TCS has consistently led this group in revenue generation. One of the reasons they've done so well is they have a very well-developed stack of vertical IP solutions that play well with their existing client base. Some of those include CrewCab, which is for airlines, Underwriting Workbench for insurance, and TCS Patient Care for healthcare providers. A common denominator for these particular solutions is their ability to be scaled and deployed mobilely with attached services. So they can be used to win small customer experience projects that help TCS prove themselves, and then those projects can lead to more expansive, profitable, multi-year engagements. And this all happens because TCS has incrementally been able to show clients they can be an end-to-end trusted advisor with relevant solutions. Another differentiator is TCS's clear messaging around how those solutions leverage analytics to create real intelligence and business benefits for those clients. For the past couple of years, they've had an entire business model that addresses the full life cycle of managing and using data for both the IT side of the enterprise and the business side of the enterprise. This really represents good anticipation, I think, of current trends where we're seeing both IT and line of business executives coming together to make decisions around how budget dollars are spent. This is an area where a lot of vendors have struggled, and I believe that the business model TCS introduced gave them a head start against peers when it comes to winning trust in the C-suite. With a company like TCS, who gets over 90% of its overall revenue from repeat customers, it gives them a leg up when competing for large-scale digital transformation projects that embed BI. Combining TCS's portfolio and business model with the reach of their global delivery network also plays a big part in their BI services revenue growth. India-centric companies have traditionally earned the majority of their revenue from North America and Europe, but TCS has worldwide reach and data centers, which makes them particularly attractive partners for technology companies like Cisco, Cloudera, VMware, and then you've got Adobe recently for digital marketing and media. So all of these things put TCS in a good position to blend BI analytics into the broader scope of digital transformation. And lastly, I just want to make a few points about where we see TCS moving forward. We talked about anticipation and the role it played with positioning TCS as a leader so far. So let's look at one emerging area or buzzword that we're all hearing about all the time, the Internet of Things. TCS made early investments in IoT, which we believe will pay off as client demand picks up and we move through the adoption curve. They recently introduced their scalable universal connection platform for IoT and their Ignio artificial intelligence platform. By making those investments, I believe it puts TCS in good shape for catching an early piece of the IoT market too. It may not protect them from a few wild cards that have shown up recently, like their 4-quarter string of decelerating revenue or the consolidating IT services market that is paving the way for some big disruption, but it's definitely an important piece of the puzzle.
Excellent, Amy. Thank you. I think one important thing to emphasize here is how when we look at the India-centric IT services vendors in the business intelligence services space, we're looking at them with a lens of all the other research that we do around them in IT services, actually in digital marketing services, for some of them in global delivery. So we wanted to use this particular webinar as a chance to really dive deep into what they're doing, and I think Amy and Jen have provided a great way of saying, look, these companies, these vendors, they might be India-centric, but they're not all the same, and the differences are incredibly important, particularly as you dive deep enough into business intelligence. So with that, we will move on to the next part of it, which will be finally bringing Kevin on board, I think, for the hardware-centric. Jen?
Well, before we get there, I just want to jump in and just mention that, before we talked about the prepackaged and cloud-delivered BI solutions are growing in popularity, and that reduces the need for custom application development. But the flip side of that is that growing demand for platforms and managed services to help orchestrate complex BI programs so that users can focus on generating business value from BI rather than managing the technology. So hardware-centric vendors hold the keys to the managed BI ecosystem with their infrastructure portfolios, and they're following the same IBM pattern as the India-centric vendors by building up consulting-led solutions. So with that, I'll turn it over to Kevin to take us through the key vendors.
Thanks, Jen. And here on slide 21, this is the same chart as you saw
earlier. Hold on for 1 second. Why don't you come down and get real close and make sure we hear you real well. Want to make sure everybody hears everything you say.
Little musical chairs there.
There we go.
And yeah, here on slide 21, as I was saying, this is just the same chart we saw earlier in the presentation. It's just with the hardware-centric folks highlighted. So on the next slide, on slide 22, I'll discuss what we've been seeing from the hardware-centric vendors, calling out a few individually. Over the last year, we've heard the majority of the vendors talk about increasing their focus on delivering business outcomes. Within the hardware group, there is some industry specialization. Fujitsu in manufacturing and retail, Cisco in communications, Dell in the provider space within healthcare. But as a whole, this group still leans towards horizontal solutions and services that can be easily deployed and implemented across many industries. This overall hardware approach of pre-configured and out-of-the-box solutions and services, it appeals to SMBs and enterprises not looking to pay up for complicated or higher-priced solutions. Hardware vendors face competition and pricing pressures from the India-centric vendors, and hardware vendors are trying to display a value proposition through a deeper ability to offer more complete end-to-end offerings spanning hardware, software, and services to keep complexity down with that one point of contact. We see this as the best way for the hardware vendors to differentiate, as we see them playing in the middle, fending off both the lower-priced, good enough solutions and services of the Indian vendors and the industry expertise of large consulting arms of the C&SI vendors. All in all, we think pricing pressures in hardware will continue to drive the focus in services for these hardware-centric folks. And taking a look at the hardware vendors individually, for Fujitsu, hiring consulting talent around strategic technology areas such as cloud, analytics, and IoT, it will help better compete for global sales and reduce a reliance on domestic or Japanese revenues. And for HP, we believe that savings from its massive headcount reductions and the post-split enterprise-focused HPE will leverage R&D and acquisition activity to help develop solutions around strategic imperatives in cloud, networking, and security, which it weaves analytics into with its hardware, software, and services capabilities. At Cisco, integrating its products and services to deliver business outcomes will be critical. Growth in its advanced services segment is driven by demand in cloud security and analytics, and a reskilling of employees in its advisory services segment will help deliver in-demand consulting expertise. And finally, on to Dell. We believe the future-ready marketing campaign and rollout of Dell's digital business services practice will help shed the market perception by some that Dell is just a hardware vendor. And we expect more developments from Dell around its IoT division. And that ties up what we've been seeing just from a high-level view from the hardware-centric group. And on to the next slide.
Thanks, Kevin. So to close today, I just want to give another snapshot from our BI professional services market forecast, where we take the trends we discussed today and bring them forward 5 years to project the state of the overall market as well as the winners and losers. Ultimately, as you'll see, the top 3 vendors will hold their positions. Each vendor has a strong foothold in the large enterprise market where consulting relationships will be key to driving long-term managed services engagements. And though a leader now due to its large install base of database customers, Oracle will lose market share quickly over the next year with flat to declining services revenues. And because of this, we see TCS remaining the leader of the India-centric vendors, but Cognizant will also join the list by using its recent acquisition of TriZetto to sell analytics-enabled transformation in the U.S. healthcare market. So the market forecast goes into much more detail with BI services market projections by segment, by geography, and then vendor projections by segment. So let's go to the next slide just to finish up. This is the taxonomy. I won't go into detail. You'll all receive a copy of this deck, but just please feel free to reach out to me with any questions on how we look at the BI services market. And as I'm sure you've heard if you've been on other benchmark webinars, part of the value that TBR brings to these benchmarks is looking beyond each company's reporting for particular service line revenue, because every company has a different definition. So by applying a uniform taxonomy, we can compare the vendors on an apples-to-apples basis. So I'll turn it over to Patrick now.
Thanks. So what we want to show here is how we've covered a tiny, in just the 40-something minutes we've been talking and the incredible depth that Jen and Kevin and Amy went to, we've only covered a slice of what's actually in this particular benchmark. It strikes me that we at no point got into the different regional breakdowns. We also didn't look at any of the quarterly topics that we've covered in depth in the benchmark. But you can get a sense here, it's quite broad. As I mentioned at the very start of this, this is the 3rd edition of this benchmark, so we've got a lot of historical data now backing up the analysis that we've got, and it obviously feeds into the forecast, and of course the customer study is another way of layering on top our understanding of what's happening in the business intelligence services market. So The last thing we'll do here is just show this is what we discussed today. This is the full suite of the portfolio within business intelligence. I would also note there's also a business intelligence software portfolio that covers a similar ground, but from, oh, actually it's on there, isn't it? Software customer research. All right. So we've got a pretty broad range. This also builds up, business intelligence fits within the broader professional services portfolio that includes, as I mentioned, management consulting, healthcare IT, public sector, digital marketing services, global delivery, and what am I forgetting? I always forget something on that. I might have got them all this time. So, and management consulting. I don't know if I said that or not. So that's the heart of this presentation. We'll take some questions now. That's again, you can see here we are. This is the full view of everything that we cover within professional services. So the first question, let me read it off of the screen here 1 second. And if you do have other questions, please send them into the chat function. Let me read the one we have here. So you mentioned TCS patient care, and I wonder if that is the route to growth. That is for BI services vendors, which is more important, horizontal or vertical-centric offerings? I will turn that over to Jen to start.
Sure. So I think both are important. I know that's kind of a non-answer to a specific question, but you know, the horizontal capability is really important as far as, you know, the technical expertise in actually implementing a BI solution. However, you know, as I mentioned before, to really drive business value, we think that industry expertise is really required, especially with something like healthcare, where there's so much you know, regulation involved and different, you know, very specific pain points that need to be addressed. So it's really going to be a combination of the technical capability and you know, around data integration and excuse me, and implementing applications, but really having that industry expertise to guide the client through the process is what's going to make the difference. Do you have anything to add?
No, I think, no, you more than, although you started with, yeah, a non-answer. I think you actually provided a very detailed answer. And if there's any follow-up to that, go ahead and put it in the chat function. The other question that came in so far is you mentioned Internet of Things, IoT, many times, especially when talking about IBM. Can you explain how IBM sees IoT and BI together? Is there a real difference or a marketing difference? That's kind of a loaded question. Jen, I'll let you take the lead on that as well.
So I think, you know, a lot of noise has been made about IBM's recent investments into IoT. Earlier this year, they announced they'd be investing $3 billion to create an IoT unit. However, you know, they've been doing IoT for a long time with their Smarter Planet portfolio. So this is really not a new competency for them. It shouldn't be a surprise that they're going in this direction. I think the change is sort of bringing together not only the technology, but more of that industry focus around solutions. As part of the announcement around IoT, they launched 8 industry-specific consulting solutions around IoT, which get into not just manufacturing, but, you know, predictive maintenance for manufacturing, like getting into very niche, very specific business outcomes when it comes to using data from connected devices. So I think that you know, it's definitely a continuation of IBM's existing strategy when it comes to from both cloud and analytics. And then with the announcement of the new IoT Foundation, I think that's really, although it's, you know, it's marketed as a cloud platform, I really think that's going to drive much more activity on the analytics side, because once they have all of that data coming into that platform, it's very easy for them to say, hey, you want to analyze it, here's XYZ IBM analytics tools to help you out, and then the consulting that goes along with that. So I think IoT, even though it seems like it's a new announcement, it's definitely not new for IBM, and we expect to see great things.
Yeah, it's a great way to put it. It's a competency they've had for a while. So, and being able to market it around the buzzword is great for them, but it doesn't mean that they're new to the table. Another question that's come in, you read it here. Where do you see opportunities for companies that haven't invested in consulting. Since I talked about the consulting-centric firms, I will take a pass on that question and let someone else take it. Amy, do you want to go first on this?
Sure, yes.
All right.
Yes. I'm actually really glad you asked that question, and I think that the answer is managed services, and I'll tell you why. A little more than a year ago, we said that India-centric vendors will falter as the market matures because they have yet to build out their consulting and advisory capabilities. I think that while we're seeing that, we can look at both Wipro and Infosys, and I use them as examples because I spoke about them earlier, but their organizations are definitely in flux, and the market is moving so quickly. And when you're trying to change your go-to-market, and you're not known specifically as a trusted advisor, and the application outsourcing portion of your business is evolving and eroding, I think that that would definitely limit opportunities. So where we see the most opportunity for those guys is managed services. To really, I think it'll be a growth driver moving forward for them, especially in North America, where adoption of BI services is moving beyond consulting, and it's now including implementation and management of those BI solutions, which definitely play more to their strengths. So I hope that answers that.
Yeah, and just to follow on, just from the HCL and Cognizant perspective, I definitely think HCL will take a similar tact as well. I mean, they are looking to move into consulting, but I still think their core business is going to be the outsourcing and managed services around BI. That's really where they've certainly had strong customer relationships, and I don't expect them to move away from that core competency. From Cognizant's perspective, I mean, they've been leading with consulting for a lot longer than their India-centric peers. So I expect that to continue, and I think where they are weak is on the infrastructure side. I mean, they definitely have a fast-growing infrastructure business, but it is new, and they have, they are not really building data centers to the extent that a TCS or Wipro would be. They're really focusing more on the C&SI portion. So I think in the long term that could hurt them.
Excellent. So we have one more question that's come in, and it has to do with the difference between software and services. So let's see if I can, the question is, are the leaders in the software benchmark the same as in the services benchmark, which is what we covered here today? That's an excellent question. And Justin, if we could go to slide 11, I want to point something out. And I know Jen can actually, yep, slide 11, perfect. So the software vendors on this slide are in yellow. Looks yellow to me, right? Okay. maybe beige, I don't know what that is. In any case, they're gold, something like that. They're all on the wrong side of the revenue growth, and for the most part, they're below in terms of operating margin. So if you contrasted this to the software, business intelligence software benchmark, I think you'd see a dramatically different picture. And that really is indicative of how over the last couple of years, Jen mentioned this right at the beginning, how the software vendors have ceded a lot of space in the services area because they're trying to win that more high value for them and higher return software engagements, and they're giving up the services end of it to their partners like Deloitte, like PwC, like IBM and Accenture. So I think if you put these, the question is, are the leaders in the software benchmark the same? Absolutely not. Jen, do you want to add some more? I know you've seen more of that benchmark.
So I can't speak as much to the benchmark, but I can speak to the customer research if that's helpful.
Yep.
So I think what we're seeing, on the customer adoption side is, yes, we are seeing the software vendors high on the list of adoption. However, a lot of times, the services are packaged as part of a software sale. So when you actually go in and break out the revenue, they're not really earning as much revenue from those sales. So even though from the customer perspective, they think that their services vendor is SAP, really what they're getting is very basic implementation and managed services. It's not the type of higher value professional services that we're seeing the C&SI vendors provide.
Excellent. And, this is sort of an appropriate chart to finish with. As I mentioned in a management consulting webinar yesterday, I think by law we have to have bubble charts in all TBR webinars, so we can leave this one up for a moment. Justin, is there anything else we need to wrap up in terms of housekeeping before we finish?
No, just that, you can follow all of our analysts here on Twitter and check out our previously aired webinars on YouTube. And just that before you sign off, please take our survey we're going to send out, because we do read that and we're always looking to improve what we're doing here. So.
And thank you all very much for listening in. And again, if you do have questions for myself or for Jen or Amy or Kevin, please feel free to reach out directly. It helps our research tremendously to know what kinds of key intelligence questions people are asking about this space and the other areas we cover. So thank you all very much.